Let's head right to the trading floor in Chicago. We're now joined by Scott Bauer, Senior Market Strategist at Trading Advantage. Scott, great to have you with us. Let me get your take as it relates to these Fed Beige Book comments. It doesn't seem as though there's anything too new here other than maybe a slightly more positive tone.
Yeah, I agree with that, and especially on the heels of, like you said earlier, the Empire State number that came out this morning, which was really a blowout number to the upside. Now, you factor all of these economic reports together, and you go back to last Friday with the jobs number as well, which was just, a dreadful, dreadful number, and it almost seems like we're back in the camp of good news is good news and bad news is good news. And to me, that's a bit scary. We've got S&Ps here right back at 1845, 1850. We've got, like you just said, maybe some positive tone in the marketplace, but I'm a bit cautious at this point. I see where the VIX is trading down near, right near that bottom level around 12. That to me is maybe a sign of this perhaps 2 to 3% correction that people have been calling for. Now, normally you see the VIX rise, when there's an impending correction or when, there's some volatility in the marketplace. But there's so much complacency right now. That, as a trader, that's what is kind of scaring me at this particular moment.
Scott, it's interesting, though. I want to get back to your comment as it relates to complacency because some of these other headlines from the Fed are really quite interesting in the sense that it seems to be very supportive of risk on type of investments like we saw in 2013. One of my questions to you would be, do you think in 2014 we get an exact replica of 2013? And let me just give you a couple of these headlines to you and our viewers as well.
Sure.
Basically, the Fed is saying that measured tapering of QE makes a lot of sense. They also say that rates won't be raised while QE is still underway. And they also say that it makes sense to continue to taper in January, barring any unexpected events. So in other words, it sounds very similar to the approach and the thinking that we had in 2013. If that's the case, why are you a little bit more nervous with the VIX being low? It sounds as though everything is almost a Goldilocks scenario.
Well, two things here. Look at what they are saying, and basically, if you go back at the verbiage that they've said over the last couple of years, right now they're in a situation of if it's not broke, don't fix it, right? So they've been saying this, and it's worked. I give them a lot of credit. This tapering has worked. They put tapering back into the marketplace before they actually pulled the trigger, and we didn't see any kind of downfall. But if you go back and look over the last 6, 12, 18 months, look at the VIX. Each time that it has dipped down to this level, we have seen a short-term pullback in the market. In other words, we've seen VIX rise back up to the mid and maybe even the high teens. So don't get me wrong here. I am not skeptical of the market long-term. In fact, I think that there's been some, really positive signs here. But in the short run here, from a technical standpoint, from, let's call it a trader's acumen, following this closely, that's what really tips me off is the complacency and that 12 number in the VIX, maybe even a little bit lower. We've seen a spike up from there each of the last 4 or 5 times that it's dipped down there.
Scott, what's the chatter like as it relates to you and your colleagues and being there on the floor? Are they complacent?
There is a lot of skepticism, yet they're not bucking the trend. Traders on the floor, if anything, they will lean their positions a little bit to the long side. But because volatility is so cheap, because protection in the marketplace is so cheap, they're basically buying puts anywhere they can, whether it's in the S&P index, whether it's in the VIX, whether it's in individual equities or ETFs, because that volatility is so long. But they are skewing their positions to the long side. But again, because premium levels are so cheap right now, protection is cheap, insurance is cheap, and that's what my colleagues are doing right now. That's what I'm doing right now.
Scott, let me ask you this as well. It's interesting as we take a look at more of these Fed Beige Book headlines. They did say that 9 districts reported an increase in retail spending. I understand that you're short some of the consumer discretionary companies. Is that right? And do you still want to be short?
I actually do here because, we've seen some really big declines in some of these big box retailers, and I'm not talking about the online retailers, I'm talking about the big box retailers, especially in, the lower end segment like the Family Dollars and the Five Belows. And why is that? Well, it's probably a couple things. A, there's so much more online shopping, and B, there's so many more choices that people have. The stores like Target, like Kohl's, they're almost matching prices to some of these real low-end discounters. I just think we're in a position right now that retail is out of favor. Macro, it's out of favor, at least on the lower end. And what's going to drive the market higher if we go higher is the banking index. The banks are so strong. With rates rising, banks are going to make more money. Inherently, that's in their profit model. That's, what you were talking to when I'm short retail. On the flip side of that, I'm long the banking stocks.
Scott, what are you thinking with gold here?
You know what? I actually think that gold has stabilized quite a bit. It's had every opportunity to break below 1,200 over the last week, 3 weeks, 6 weeks, and it's really stabilized. I actually think in the short run here, there's a better chance that we go above 1,300 than break 1,200 here. I'm bullish on gold in the short run here.
All right, Scott, we will leave it there. Thanks so much for joining us. Great to have you on the program.
Great.
Thank you.
Have a great day.
You as well. That was Scott Bauer, Senior Market Strategist at Trading Advantage.